Hey there, it's Walter here from Naked Forex, and I'm going to talk about this trade level compounding. I've talked about this in other videos. You can go back and watch those. But basically, when you're trade level compounding, you're doing a very different style of trading, and it's kind of uncomfortable when you first get used to it. So this right here is a trade that is on the Aussie yen, and you can see here that the entry and the stop loss are this far apart. The ultimate target's down here. But what's more important is that what happens is with this, I've actually got two accounts going using these methods, but essentially we have these little tiny trades because it's quite a small account. And what happens is when we get some winners, we take the winnings from these trades and we add them to the next trade. So what happens is you get this really cool compounding effect, which is completely different to what you normally see when you compound at the account level. If you want to learn more about this, you can go to Naked Trading Class and get the free class on this. But basically, most traders are comfortable trading a curve that looks like this, 45-degree angle or thereabouts. And sometimes you get these little blips like this. And then what will eventually end up happening is you lose either all or most of the account in one catastrophic waterfall. That's basically martingale style trading, right? And most traders are comfortable with this, especially when you first start trading. You start looking into strategies like this because the focus is on winning. This approach, this compounding at the account level, is completely different. What happens is you occasionally, once you get some wins, you take those wins and you stack them onto the normal risk, and you end up with much bigger winners. So these are open trades now. We don't know where they're going to end up, but they're looking pretty good at the moment. And then here's another chart, another equity curve that I want to share with you because this is kind of what it looks like. It's almost the opposite to what you see in martingale. So you start off in a drawdown, almost always in a drawdown, and then once in a while you'll hop up. So you'll be in a drawdown, 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 lose, 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 and then bam, hop up. And so it's a very different style of equity curve, and you have to get comfortable trading these areas here because that's where you make your money. By sitting through this, then you live to see that. Okay? You can learn more about this style of trading and the live trading that we're doing with this at nakedtradingclass.com. It's a free course. You can go in there and figure out if one of those three strategies in that course is useful for you and something that you might want to test and perhaps trade in your own trading. I wish you happy trading, and we'll see you in the next video.